Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart.
In this video, I will be speaking about CHFJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow by looking at the commitment of traders, which is the COT data, so what the non-commercials and the biggest speculators in the market are doing, which are essentially hedge funds, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly resistance, which is now turned support here. Now, as we're testing previous resistance turn support, we could expect more bullish price action to be created away from this area. We can also notice how we do have an impulse and correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a market which has first tested at 0.786, then tested at 0.618, and now we are around the 50%. So essentially we're moving step by step, testing all the Fibonacci levels, and we could expect more bullish price action to be created away from this area. Dropping down on the weekly, what do we have? Now, from a weekly perspective, the situation is quite different. In fact, what we can see is that we did have the creation of this M pattern. And in general, after the creation of an M pattern, what you could expect is a potential move higher for the completion of the M pattern at the neckline, which is previous support turned resistance, which is in fact exactly what the market did with this move to the upside, completing the pattern at the neckline. However, in a situation like this, we must also acknowledge how the neckline itself is a resistance area because it is previous support from which the market created this move to the upside, which is currently acting as resistance. So from here, there is the possibility to see a potential rejection to the downside away from this area. Dropping down on the daily, what do we see? Now, from a daily perspective, we can see how the market is currently testing previous daily support, which is now turned resistance. We can also see how in creating this move to the upside, the market has currently printed in overextended W formation. And in general, after the creation of an overextended W, what you would expect is a potential rejection lower for the completion of the W formation at the neckline, or at least for the market to reach the 0.32 of the Fibonacci taken on this daily impulse. So from the low to the high of this impulse. So essentially what we would have here is a first potential downside target, which is at this 0.32, and then the second downside target, which is at the neckline of this overextended W formation. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, and we check the data for the CHF, we can see how with the last reports, the net positions have been decreasing. We went from minus 3k to minus 7k net positions, where we can see that longs got massively closed. We went from 10k all the way down to 4.8k longs on the CHF from an institutional perspective. Now, this makes the CHF weaker, meaning that there is definitely a possibility for a potential rejection to the downside away from this area, considering that this is also previous daily support from which the market created this rejection to the upside, which now that the market has broken it to the downside and is retesting it, is currently acting as resistance. So it definitely seems that with good probabilities, we could have a potential reversal away from this area. So how we could be approaching this now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the downside for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it.
If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.